What's good, everybody? Today is August 14th. We're about to run through the entire price action from today. We're going to go over this crazy nice short setup that happened on the 1 minute chart around 10:50 today. So without further ado, let's just hop straight into it. All right, so first, let's just do some top down and quickly check out what happened yesterday, right? So yesterday opened and just started dumping, right? Yesterday dumped and tapped back into this huge daily, or at the time it was a 4 hour, now it was a daily after last night. So we tap into this daily imbalance sitting somewhere about here. And then after this, what we end up doing is we start pushing to the upside, right? And understand that this happened at 8:30. So after making this displacement, we started manipulating, and then we swept this internal high, and then we went ahead and displaced at this news, right? So 8:30 news went ahead and placed in this big candle. So our news protocol, we have this 8:30 news candle with some high impact news. What we do is we mark out both sides of the candle, both sides of that candle, and we wait for one side to get swept. If it's in line with the bias, the trade will be great. If it's not in line with the bias, the trade might play, but we have to watch and react. We can't predict, we have to watch and react, right? So quickly looking at this, I want to see either this side gets swept, which ended up happening, and take it short, which is exactly what happened, or I want to see the complete opposite, where we see the bottom get swept, and that becomes more in line with the bias, and then we could have taken a really clean long up to these highs, right? However, we didn't get that, we got the short setup. So I'm not picky, I'm simply just waiting, and I'm happy to see what I see, right? So going into open, we have a pretty much straight up move. So market's kind of consolidating in the morning after making this move, and then we go ahead and start pushing to the upside. What's interesting to me is that right around 9:50 we pushed, and then we put in this kind of right here, this super close, super relative equal high, right? So I want to see this high go ahead and take this level right at 9:50 macro and then start displacing. That would have been a super clean trade to take to the downside. However, it didn't take the level, so I didn't take a trade, right? And I think the purpose of this is just to watch how price tries to bait people, right? It's just to bait people into hopping in an early short, which I bet you that a ton of people did. They thought, oh, well, it's going right now, so why not just hop in now, right, and then take it? No, because the market didn't actually take buy side. We have to say, when we're building a bias and we're actually confident on a direction, we have to ask not why the market should move in our direction. We have to ask, why should the market not move in our direction? Like, look, buy side hasn't been swept yet. So by following your trading plan and understanding that you are not going to enter any kind of trade until we hit this external draw, there is nothing for you to trade. There's no loss to take in this entire move right here, right? There's no trade to take, there's no nothing to take. And because of that, it gives you peace. So what do we end up seeing? We see NQ go ahead and take this draw. We put in some kind of 6 sister, right? So at this point, NQ, ES has an SMT at the swing high. Then we go ahead and we run it, right? Right when ES taps that high, NQ is a little bit higher, we go ahead and we see inversion of order flow, right? So we see this entire leg of order flow now get inversed. And when you see that fast with displacement, especially at 10:50 macro time, our last ditch macro, where if price is accumulating in the morning, we can expect 10:50 to be efficient. If 10:50 is not efficient, there's no trade for the rest of the day. That's how we need to think about this. So 10:50 macro, let's quickly mark that out, goes from 10:50 to 11:10. So during this time, this is when I want to be entering my trade ideally, right? What do? At this point, we inverse all of this order flow. So quickly placing that inverse for value gap, right? We end up using that if you're an inverse for value gap trader, good shit. And we see change of the state on this level. After we see change of the state, this candle comes in, blesses us with that. What do? I place my entry at change of the state. So we go ahead, tap right here, and then look, market dumps. Market absolutely dumps. So we would want to be taking that into all of these stacked lows right here. 1, 2, 1, 2. And now if we look 15-minute imbalance too, so zoom out to 15-minute time frame, we see 15-minute imbalance put in right here, right? So if market wants to pull back to an imbalance, push higher, that's my take profit. If market wants to continue running past that draw, that's my first take profit, right? That's how I want to be trading this. That's why I can stack take profits. That's why I can have security with every single one of my trades, right? So what ends up happening here? Well, if you had a keen eye, you could see if you place your entry at that change of the state level, you do not get tapped on this. And it's sad, but it happens, bro. That's the game of trading, bro. I sat here and I watched this not get tapped and dumped, and I was like, bruh. And like, we have to be, of course you're going to be annoyed, but you have to understand that the market moves in a divine order, right? Like, if the market's going to do it, it's going to do it, and there's nothing I can do to change the market, right? So when I see the market maybe drop down here and I'm like, bro, it's going, I'm just going to enter, right? I enter in, stop at this high. Maybe I made out, like maybe it was fine or whatever, I made some money. But bro, do that 100 times, and I'm telling you, you're going to lose money 80% of the time. Now, do this. Take this 100 times, and I'm telling you, if you get tapped or not tapped, overall, you're going to be making money 80% of the time, right? This is a game of building habits, right? So I cannot care about one trade that doesn't tap me, right? I can only care about the trades that do tap me, and I can only care about my losses everything, watching the market, understanding how price moved. I'm happy because today I had a great read. I understood price action super well. I was disciplined and I followed my good habits, so it was a green day. It doesn't matter about money. It does not matter about money, right? It just matters about what the charts are doing, how I can analyze that, how I can understand it, and all that kind of stuff, right? So why was this trade so efficient? Why was this a straight down move? And if you're able to get in this, why was this such a great opportunity? There's a couple things. First, time and price, right? The saying goes time and price, not price and time. So look, if price is aligned beautifully, but time isn't there, price will not move. It goes time and price. Time is first, always. So let's look. We're at 1050. When we see that entry, we can expect this to be super efficient, especially if, like I said earlier, the AM has been accumulating price action, generating liquidity. We can expect the PM, well, not the PM, but 1050 macro to go ahead and run some of that liquidity or rebalance, right? We have to kind of be aware of that and say, if the AM session has been choppy or not delivering the best right now, we can then expect 1050 macro to be the last ditch macro, which is the last ditch time that this is price's last ditch to be efficient for the day. If it doesn't do anything, then I'm not going to trade. It's that simple. And implementing those rules, decreasing the amount of trades I take has truly helped my trading a ton, right? So that's the first thing, time and price. The second concept is something that I've yet to talk about, and if you watch my high resistant, low resistant liquidity video, I touched on it a little bit, but we have to understand where the liquidity lies and where in this run that we're expecting is price going to move fast and where is it going to slow down. Let's look. When we see stacked lows, so this whole area right here, quickly mark this out with a box, right? When we see stacked lows from this whole area, once price gets into this area, it will move fast. It will run all of these lows fast, right? However, when we see price into an area like this where there's an imbalance, we either expect price to inverse the imbalance or move slowly through it, right? Or it could just reverse, right? So that's why we want to be understanding, I need to see this first obstacle get removed, and then once we're into the green where price is going to drop, then I can enter my trade happily, knowing that I'm confident that price will now go because it doesn't have any obstacles left. Think about it like this. We removed all the barriers to price dropping. We waited for all the barriers to get removed. Now I'm just taking that straight shot to the entry, to the take profit, right? So bad area where price could potentially reverse, slow down. Good area where we know and are confident that price will go ahead and run through, right? The next area that we have to look at, because this is how order flow legs are usually designed, right? We're going to have generated liquidity and then we're going to have an imbalance, generated liquidity and imbalance, right? So right here, if you look, we have a 5-minute imbalance, right? And if we're trading the 1-minute chart, we want to be aware of these, right? We want to be aware of all the higher time frame imbalances. If you look in the 15-minute, we had another imbalance right here. So we'll just mark that out again. 15-minute imbalance. Now let's zoom lower. Let's see where in this leg is the actual imbalance resting. At this point, this is an area of imbalanced price action where I'm looking and I'm seeing price move very quickly through this one level and didn't provide entry opportunity for anyone who wanted to get involved in this level right here. So this is the true imbalance. Right here, we don't really have much of an imbalance, right? We just have price accumulating back and forth. There was definitely entry opportunity on a lower time frame here. So I'm not going to consider this a true imbalance. However, what this is now is looking at the 1-minute chart, actually looking at pattern recognition and structure. This is all stacked lows down here. We have 3 relative equal lows right here and 2 actual equal lows right here. So let's quickly mark this out. This is our drawn liquidity. This is where I'm expecting price to dump efficiently to, right? So if we can go ahead and get through that red, that barrier, we then expect price to start moving efficient once it gets into all of these lows, right? So marking this out as green. This right here is where we can expect price to move quickly. If you look, right once price taps into this, it gives a little bit of a fake out long and then goes ahead and dips, bro. This is where we want to be involved. This is how you have to trade. You have to look for that efficient price action, right? And if you don't get that, you are putting more risk on the table. You're taking more time. You're just not trading efficiently, right? That's how we want to be trading. That's how we want to be doing things like this. So I think the final thing that we have to understand about this is zooming out, right? If price wants to rebalance to look, price made a 5-minute change of the state right here, and we didn't put an SMT, but we made a change of the state on NQ, right? And this is similar to what happened yesterday, where we didn't have a change of the state yet on ES, but we have it on NQ, and we still took the trade and we were rewarded, right? So taking this trade, I'm aware that this could be a potential 15-minute long model, right? We could expect price to either rebalance into any of maybe this inefficiency right here, go ahead and look for longs, or this inefficiency down here, then go ahead and look for longs. But by taking my take profits at strategic points, so within that imbalance, taking them at points where price could potentially reverse, I'm able to protect myself from that outcome because I know that if price wants to reverse, it is incredibly likely to go down to either this value gap or this value gap, where I'm already securing profits at those points and then reverse. So even if it goes ahead and reverses, I've still made my money. I'm still completely fine with it. And then as well, understand that leaving runners. So placing this position back in, we can look at how would I have left runners for today? Well, y'all know I usually like to use standard deviation levels and liquidity levels, right? The external draw is all the way down here. So this is our dream runner. And if we look, it didn't get tapped. However, let's look at what standard deviation would have told us today. If we look, our true standard deviation leg probably most likely would be on the beginning of this move. So I'd probably place it somewhere right down here. 2 to 2.5 is right in this range. So this could be a really great take profit. I probably would have just placed the take profit right about here. If you wanted to mark this out differently, I mean, you could have gotten a super aligned standard deviation, something like this, where, I mean, this perfectly ticks. So I guess you could say this is the true manipulation, where we see price go ahead and seek 2 to 2.5. This could have been another take profit right here. That's the absolute bottom tick of the day, 4.21 R, super efficient trade, super great stuff. This is how probably the best take profit stop loss setup, R setup that you could have had today, in my opinion, with the way that I trade. So, I mean, this is another great way to trade. This is how I would set take profits. I like to look for aligned standard deviation levels with actual resting liquidity levels and areas in which price could reverse to lock in my profits and secure them while I'm still in the trade with P and L floating. So overall, I think this was a super textbook day, honestly. It's this range, this news range that has helped us a lot in the past few days. News pops out at 8:30, so let's quickly search on Forex Factory. News, when it happens at 8:30, right? Some news tomorrow at 8:32. We're expecting to see the exact same thing happen today. And I'm gonna tell you guys right now, I'm gonna look for the exact same kind of trade tomorrow because this happens. These news highs and lows are strong jaws on liquidity where we can expect price to go ahead and hit, right? If price hits those orders, hits those levels, it's gonna be filling a ton of orders, right? Which is likely to at least reverse price enough to give us some sort of trade. It's not going to go ahead and shoot price all the way down to Nardia to give us a 20R. Like, that's not what we're doing. We're simply taking what we can get and being incredibly happy with a crazy 4R, bro. People trade 1.2R and they're happy with that, right? Why can't I be happy with my 3R, right? I don't need to look for home runs. I just need to look for those base hits. Those consistent base hits are what make millionaires. And you guys know this stuff. But something inside you guys wants to just keep chasing trades. We have to submit to our process. Know that when we submit and we don't want to trade, we treat the market like a side girlfriend, not someone who we're devoting our lives to, because that's not what this is. We need to be faithful followers of our strategy and not overanalyze things. So when we treat the market like a side girl, it comes with abundance. Everything that the market gives us, every setup the market gives us is like, ooh, we get a new setup today. Like, this looks good, right? It's all stuff that's really great for us when we see and just watch it play out without a need to trade. It's like the market constantly feeds us. I don't have to keep asking for it because it's going to keep feeding me. And that's one of the biggest realizations you can make as a trader that I'm telling you guys will absolutely change the way you look at the markets trade, is trading through abundance, not scarcity. It's the biggest thing you can do. So I hope you guys can find something useful from the video. If you have any questions, go ahead and drop them in the comments. Hope you guys learned some stuff from the video, and I'm gonna let you boys go. So peace out.